Hi, JJ here again with The Art of Value. Welcome. Well, a bit of a bonus episode today, I think, this weekend with the unfolding situation of Silicon Valley Bank. I'm going to give a little bit of a history of what's happened, what's happening right now. It's interesting what led up to this. It seems very sudden. Okay, so let's get straight into it. Silicon Valley Bank. It's the bank of venture capitalists and tech companies in Silicon Valley. It's probably not known as much outside Silicon Valley or the tech community, but it is very important to the US tech industry, really. Both VCs and their companies bank there, hold their cash there. So this is a very important event and it's unfolding right now. Remains to be seen what will happen, how much of an effect, if there's any contagion effect to the wider economy, the wider financial industry. It seems like other banks have gone down, their stock prices have gone down because people do remember the global financial crisis and the contagion happened there. I'm not so sure that would happen, but again, it's very important. This bank is a bank to the tech community, company founders, companies in particular who all bank there. So if you're on Twitter, you might have been seeing it unfold in real time. There's a lot of tech people on there. People are wondering what will happen with their cash deposits. There seemed to be a bit of a bank run, an actual bank run. I saw a video of people actually lined up outside Silicon Valley Bank to try and get their funds out because there's talk that they won't be able to get their deposit. It's insured for up to $250,000 in the US, but the average deposit for this bank is way higher than that, as I understand it. So what will happen? There's a chance, I think, another bank could come and buy it, like your JP Morgans, your Goldman Sachs could bail it out. I don't know. I'm not an expert at all, but it wouldn't surprise me if that happened. Guarantee the deposits or let these tech companies, the smaller tech companies, have their cash deposits. If not, it's a bit of a disaster. Imagine being a tech company without access to your cash, or say you've got $1 million in there from your VC or more, and you can't access that. You can only access $250,000 and you've got to pay for things like payroll, etc. And your VC can't access money either. One of the lessons here is, I think, to spread money over different banks. So I wonder how many companies, how many VCs had money just in this one bank, because it is the Bank of Silicon Valley. We don't know. We'll see how it unfolds in the weeks to come. So as it stands, as I'm recording now, the FDIC has shut down the bank. That's the Federal Deposit Insurance Corporation. They have the power to do that. So it remains to be seen what will happen from here. They've actually shut it down, so people are just freaking out. And so I think some things will be over the weekend try to be sorted out, and we'll have to see what happens come Monday morning in the US, I guess. This reminds me of the global financial crisis in terms of things happening hour to hour. There were emergency meetings for bailouts and things, so it remains to be seen what will happen here, but it's going to be really interesting to see how it unfolds. This is history in real time happening, history in the making. That's why I want to make a video about it. If you're getting value out of this episode about Silicon Valley Bank and the unfolding saga that's happening, the dramatic events, please hit that like button on YouTube to help spread it to more people to find out about this, or on Rumble as well now. We'll just have to see what happens. Nobody knows. Only the people close to it really know, are really experts in it, and actually the people who have money in the bank and the people making these arrangements with this important tech-focused bank. Silicon Valley Bank has claimed that more than half of all tech and life science companies, that's venture-backed companies, use Silicon Valley Bank. So this is why this is so huge for the tech sector and life sciences. A lot of these companies and venture capitalists use it. So this is a potential freeze on money, a credit crunch, if you will, or in a cash crunch for Silicon Valley. So this is why it's so important. I wonder how many of these tech companies and VCs have money in various accounts in different banks, or they just bank with one. That's definitely one of the lessons. People learned that in the GFC, the global financial crisis, but I'm not sure about Silicon Valley thinking that this would ever happen to a tech-focused bank. But it has, and here we are. So just to recap really recent events, less than 2 days ago now, the stock went down 60% in one day, and then after hours 20%, and then trading was halted on the news that the company was going to kind of rebalance their balance sheet. There has been talk in the last few months about trouble with the bank's balance sheet. I hadn't really been paying attention. It's not kind of my circle of competence, but I do take an interest for obvious reasons. I'm invested in tech companies and some small cap tech companies, so this could affect those types of companies, which I'll talk about in a minute. On Friday, US time, trading was halted in the stock pending some news, and then the FDIC shut down the bank. So it's gone from a $16 billion valuation to being shut down in 2 days by the FDIC. So the FDIC has said that all insured depositors will have access to their money no later than Monday morning US time, but uninsured depositors, it's a different scenario. Uninsured depositors will receive a receivership certificate, which means that apparently when they sell assets of the bank, these depositors will be in line to get some money back then. But it's unsure. If I was in that position, I would be pretty concerned about whether I was ever going to get money back. As I understand it, by the FDIC, in the United States, it's $250,000 only to be insured, to have cash in the bank, which is quite a lot compared to some other countries. That's good. But if you're a tech company, if you're a startup, if you've received money from a venture firm, you might have way more than that. But over $1 million, up to $5 million. I've heard the average deposit is high like that. So we have the certificate of a promise of when assets are sold, you might get money back. It seems very uncertain, and that's a lot of money not to have if you're a young tech company or even like a mid-sized tech company and you're counting on that cash. So the way that I see it, and I'm just guessing here, but with some knowledge of the global financial crisis back 2007, 2008, what happened with the banks there. If, say this weekend, a big bank like JP Morgan, Goldman Sachs and so forth comes in and says, okay, we'll bail it out, we'll buy it, maybe people will have the cash come Monday morning. These tech companies will have the cash. If they have to wait for assets to be liquidated, it could take a long time to get that money. So rightfully, people are really concerned. The founders of companies, the people that run these companies, would be really concerned. The other option is if the government bailed it out. I guess that could happen too. As I said, I'm no expert, but you'd have to think politically also. I mean, the Fed's not meant to be political, but they have to do it in concert with politicians. Bailing out a bank that has billionaires, multi-billionaires. The reputations of these big tech companies hasn't been so great lately. So you'd have to think this would be one of the worst, most unpopular bailouts right now. So I can't see that being a great option. I seen Bill Ackman saying that's maybe what has to happen. He's basically implying that a bailout is necessary. Other very wealthy investment firms that could get involved too. Buffett is known to get involved in the banks at 2008. Berkshire's got enough money to come in and do it, but whether they think it's worth it. So a lot of things could happen. I don't know. As I said, I'm not expert in this area, but it's going to be very interesting to see what happens. And liquidity, cash, is a real issue here for these tech companies and for the whole tech sector. It's amazing that Silicon Valley in general is kind of in this position because of this one bank, which was very highly regarded. And I don't think anybody thought that this was going to happen. But here we are, a bank run in 2023 in the United States in Silicon Valley. So I've heard on Twitter and elsewhere just recently about payroll being the biggest issue. So that liquidity, that cash, I have heard that it's typical for startups and tech companies to have, say, $1 million or more in an account for payroll and other immediate things like that. That's going to be due, that's going to be needed in the next few weeks. So conceivably they only have $250,000. So they had $1 million, $2 million in there, and they can only access $250,000. And their venture capitalists have money in the bank as well. Conceivably they don't have enough cash to last, and so some of these smaller tech companies, they suddenly put into the position of being in a difficult situation. It already was a difficult situation given the bear market in tech, and some of these companies are down 60, 70, 80, 90%, and this problem comes along. And is this kind of going to be, in terms of the stocks, a capitulation event, the final kind of washout that a lot of value investors in particular were thinking would happen? Is this it? So I think in the months and years to come, we're going to see a lot about how this happened, what led up to this, how did this happen, what happened? There was this bubble, this tech bubble, and the pandemic did have something to do with that, and the Fed lowered interest rates to zero, so there's all this money around trying to find a home, and so VCs were flushed with money, Silicon Valley was flushed for money. See, since the tech bubble, this is a period similar to that, where there was just so much money being thrown at ridiculous projects. We've seen troubles with crypto. Even at the same time this is going on, there's still trouble with crypto going on. That's the way the Silicon Valley works. There's too much money going in, and maybe you get a few big tech companies out of it. People are thinking back to the tech bubble. We got the Googles and the Amazons out of that. There was a lot of money trying to find a home at zero interest rates, and it turned into a bubble, and now it's all playing out. and Silicon Valley Bank was essential to that. When we look back on it, we'll see that it was kind of central to that, because a lot of this money was being banked. And Silicon Valley Bank itself, what did the bank do with that money? So 2018 and 2019 were pretty big years for venture capital, a lot of money going in. And then 2020 and 2021 happened. 2020 was a huge year, and then 2021 was even bigger than that. Do we remember back to the SPACs? Remember the whole SPAC boom? How there was just hundreds of companies that came out of SPACs. That was all of a sudden a way to rush companies to market. It was kind of aimed at the retail investor. People bought SPACs not knowing anything about analysis, or just throwing money at these companies. When we look back on it now, it was kind of ridiculous, and it was a bubble. There were just hundreds and hundreds. And a time before that, the tech bubble, it was very reminiscent of that, where there were a lot of ideas that a lot of money was thrown at. This could be the final capitulation in this cycle. On top of that, if you remember, the big tech companies went on a hiring spree and invested hugely. Remember, Amazon invested in new warehouses, new staff. There's staffs of Google and Amazon and companies like that, the big tech. Their staff just went up, and there was a competition for staff, all this money being paid, so salaries went way up, and so there was all this money chasing talent, and they're trying to build fast, and all this growth got pulled forward. And now what's happening is we're seeing companies are cutting staff 10%, and then another 10%, another 10%, not generally all at once, except for, say, Elon Musk going into Twitter and cutting 70% of their staff. There was a lot of money at zero interest rates in Silicon Valley sloshing around into different projects. So this is kind of the washout, and Silicon Valley Bank became as inflated. If you look at the stock graph, it was worth over $700 per share at one point. So all this bubble in the tech sector, zero rates, did affect Silicon Valley Bank. Apparently their deposits went from $62 billion in 2019 to over 180 billion, I think 189 billion in 2021. So this huge influx of money into the bank. With this $189 billion in deposits that they had, a huge jump in just 2 years, they could not loan out that money to startups, to companies. It's just too much. So they looked for other avenues to invest that money, and they invested in treasuries, US treasuries, which are supposedly a very safe investment, but they had a lot of money to do it at that time, and that's what they did with it. So they bought long duration US treasuries in a very low rate environment with this huge amount of cash that they had. And so then we all know what happened after that. Interest rates went up. Those treasuries are worth less on paper. Interest rates went up as fast as anybody had seen for a very long time because of inflation. The surprise of inflation that the Fed said was transitory. It wasn't transitory, or at least it's not as transitory as they think. We don't know how long it's going to last. It seems to be coming down a bit, but interest rates went up very fast. And so this supposedly safe bet that they made, these safe investments that they made, suddenly didn't look so safe. So this is where the problem comes, this $189 billion they have in cash. What happens if people want to withdraw that money? If companies want to start withdrawing that money, which they started to do, it would probably be fine if you held the treasuries for these long duration as they were meant to be, but you can also sell them. And they were forced to sell. It looks like what's happened is that they were forced to sell because people were withdrawing cash out of the bank, and suddenly they locked in those losses, selling them at a huge discount rather than being able to hold them. And this has caused a structural financial problem at the bank. So this isn't the bank run that we've just seen. This was earlier on where people were withdrawing money, but they had to sell these treasuries, and it created a $1.8 billion loss. So this got people more panicked, more worried. So as people were getting more concerned about that, the bank announced that they were going to sell shares of $2.25 billion to raise money to shore up their balance sheet. This is what started the real concern in the market, that people started to pull their money out because the bank basically signaled to the market, to the community, that they were possibly in trouble. They needed to do this, that they didn't have enough money. So that gathers momentum for a bank run, and that's when the actual bank run started. So this week, momentum gathered for this bank run because, or partly because, VC funds who were starting to advise their startup companies in their portfolio not to keep any more than $250,000 in cash in SVB Bank for obvious reasons. So on Thursday in US time, the CEO of SVB Bank came out and stated to its community, its customers, to support them in this challenging time as we've supported you in previous challenging times. I'm paraphrasing there, but that's basically what he said. And that's another signal. You really don't want your bank to be saying that. You don't want your bank to be saying, please support us by keeping your money in. What's that going to do? It's going to create more panic. It's just a classic bank run. It was meant to stop panic, but only increased panic. So that's where we are now. Just to timestamp this, it's about 8:30 in California on Friday night and 11:30 in New York. It'll be interesting to see what happens as this unfolds in the days and weeks to come. History unfolding in front of our eyes here. I hope that this has been kind of informative and you've got value out of this. If you have, consider subscribing if you're watching on YouTube, and it's on Rumble now, on videos on Spotify, or if you're on audio in your favorite podcast app, follow or subscribe there. And I'll see you next time.